Hello, dear friends. My name is Clive Thompson. I've been investing money for over 50 years and I made a lot of mistakes. And having learned from those mistakes, I don't make as many as I used to make. I also learned a lot of tips and tricks and ideas about how to buy stocks which are going to go up. I think I know a thing or two that I didn't know 20 or 30 years ago. So I'm here to share with you some of my knowledge and information and ideas so that you make less mistakes and you make more money when buying stocks. And today we're going to be talking about a particular type of stock called the gold mining stocks. This is a particular segment of the stock market. It's a very small segment, but I know a lot of people like to buy gold, and some are looking at the question of whether they should buy gold mining stocks. So the question is now a good time to buy them? And I'm going to tell you I think it is. And I'm also going to name for you, out of all the stocks I've researched many gold mining stocks. I'm going to name for you 10 of my favorites. And out of those 10, there are two which I think are absolutely fantastic. I think the share price can go much higher over the next few years. Well, all of them, the share price should go higher. Now, let's just talk about the type of gold mining companies I like and the type I don't like. The companies I like are companies which have got plenty of gold in the ground, they're digging it up, they're selling it, and they're making a profit. They're selling it for more than it cost them to dig it up. And according to all the information in my possession, I'm looking for companies which are likely to dig up more gold in ounces terms next year than they're digging up this year. So I would favor companies with lots of reserves or mines which are under development, but obviously I still want to see a profit from the mines which they have already developed. And these are larger companies in general, not always, but in general. The type of companies I don't like are the companies which are looking for gold. Now, it's not to say they're all going to be bad. Some of them will be real 40 baggers. They're going to go from wherever they are to 40 or 100 times what the price today. But many of them will end up just as holes in the ground. But when you meet the executives of these companies, in many cases you're going to hear hints and whispers of the probability of the gold being there. They've got all kinds of signs that this area they're exploring should contain gold. Mostly that's going to turn out to be wild guesses or lies. So if you go into the non-profitable companies, the ones which are not yet digging up the gold, you're in much more speculative territory than if you're buying into the companies which are digging up gold and selling it. And it's the latter in which I'm going to be talking about today. So let's talk about stock market sectors for a second, and we'll come to the gold mining sector. So within a stock market, I don't see it as a stock market. I see it as a market of stocks. Every day, some stocks go up, some go down, and the index tells you the average of what all those stocks have done. But just because the index went up doesn't tell me specifically that my stock went up. It might have done, might not have done. And the same thing applies to sectors of the stock market. Now, a sector of a stock market is a collection of companies in a particular industry. For example, the technology sector. That's a subset of the market. The automobiles sector, chemicals, financials, telecoms, resources, AI, and of course the sector we're talking about today is going to be the gold mining sector. So sectors come into favor and go out of favor. And that process could take many years. So right now, for some years, maybe 5 years, we've had the technology and artificial intelligence sectors leading the markets higher. But that isn't always the case. There can be long periods where other sectors are pushing the market higher. And what you'll notice is that the gold mining sector, for many decades, more than a decade and a half, has been left in the doldrums. It's just been ignored by investors. And the result is that the gold mining sector has become very small, very undervalued compared with other sectors. What that means is that if money starts to go into the gold mining sector, it could move up further and faster than anything else. So today, later in this video, I'm going to share with you 10 of the gold mining stocks that I have chosen after studying many, that I think offer unusual prospects for growth in their share price and earnings. And out of those 10, I've also picked 2 which I think are truly outstanding. I'll tell you the names later in this video, but please remember 2 things. First of all, none of what I say is going to be investment advice. It's just my personal opinion, and my personal opinion might turn out to be wrong. And lots of things can happen which I don't expect. I'm not your financial advisor. I don't know anything about you. I don't know about your other assets. I don't know about your income. I don't know how old you are. I don't know what your aspirations are. And I do not know what your risk tolerance is. So before you make any investment, please discuss with a financial advisor who knows all about you, and in addition, do your own due diligence. The second thing I should say before I talk about any specific stocks is that almost certainly every stock I mention is a stock that I already own. There's a good chance I'll buy more of the same stock in the future at some point when I see the right moment or when I've got some cash available. And just to say, of all the stocks I mentioned, there's absolutely no plan to sell any of them for the foreseeable future. Let's look at the size of the gold mining sector. As per the picture on the screen, the entire sector is valued at about $691 billion. The value of $691 billion is in fact a very small number when it comes to stock market terms. To illustrate that, let's take some of the largest companies in the stock market, like Microsoft. Microsoft is 6 times as large as the entire gold mining sector. On the screen in front of you, you can now see the largest gold mining companies. The largest one, Newmont Mining, which dwarfs more or less the rest of them, is $75 billion. Now, let's look at this slide on the screen, which lists the largest companies in the USA. As you can see, there's about 14 companies which are larger in size individually than the entire gold mining sector. So, for example, Oracle at $713 billion is larger than the $691 billion of the gold mining sector. So is JP Morgan Chase, Walmart, Berkshire Hathaway, Tesla, Taiwan Semiconductor, Broadcom, Saudi Aramco, Meta Platforms, Amazon, Alphabet, Apple, Microsoft, and Nvidia. All of these companies are much larger than the entirety of the gold mining sector. For example, Microsoft alone is 6 times the value of the entire gold mining sector. What does this mean? It means that if a very small amount of money were to leave the technology sector to enter into the gold mining sector, it would probably have little or no effect on the technology sector, but on the gold mining sector, it would have an extremely leveraged effect because of the tiny size of this gold mining sector. I believe that this is something which is just about to happen, and I'm going to show you why in a minute. But first, I want to take a look at the gold price and what I think is likely to happen to the gold price given everything we can know about the world today. I think the gold price will stay high and most likely go higher. The reasons include the following. First, we have the geopolitical tensions which are rising. We have the government debt, which is huge and unmanageable. And we have some uncertainties regarding the dollar. So those are the reasons to be fearful and want to move into something different from fiat money. Now let's look at the gold mining companies in general. The large miners are in very strong financial shape. Having gone through the doldrums for the last 15 odd years, they've been conserving cash, paying off debt. So for the most part, they have little or no debt, and in many cases they have large cash balances, which are war chests which can be used in case of need or to buy something else. The gold mining sector has been ignored for years. Investors have been chasing AI, technology. The consequence is that gold mining stocks have become very undervalued. Now, this year, the gold price has risen by 26% so far. It's gone from $2,658 to around $3,360. What that means is the price forecasts made by the analysts are largely out of date. Most of these forecasts were made much earlier in the year when the gold price was lower, and they assumed that the high price they were seeing already then was just an anomaly and would go back to some sort of normality. So when they forecast future earnings per share or future sales or the future share price, they were working on an assumption of the gold price being much lower than they would probably work on if they were to do the maths again today. So as I say, gold is up 26%, and most of these forecasts were made at a price when the gold price was much lower. That's the forecast of the earnings of the gold mining companies. Next point, I think that institutional money is probably returning to the gold mining sector after decades of neglect. Now we're looking at a chart of the gold price since 1968. It's the area chart with a white top and coloured light green. As you can see, the gold price is up 9,500%, or put it another way, it's up about 95 times the $35 price in 1968, 1971. So the gold price has gone from $35 to nearly $3,500. That's 95 times as much as it was, nearly 100 times as much as it was. And put into percentage terms, that's a gain, a profit for those who held it throughout the period of 9,500%. But on the same chart, you can see the chart of various gold mining companies going back as far as I can get the data. So the first one at the top on the right-hand side in orange is AEM, that's Agnico Eagle Mines. And you can see that Agnico Eagle Mines have risen by about 4,500%, half the rise of gold since 1968. The next one down is, it's letter B for Barrick Gold, or Barrick. It used to be called American Barrick, and the symbol used to be ABX, but it's now just the letter B. So Barrick is up about 3,500%, much less than the 9,500 of gold. And below that, you can see WPM. That's Wheaton Precious Metals. And their share price is up close to 3,000%. It's 2,900 and something. Below that, you see NEM, which is Newmont Mining. Newmont is up very roughly about 435% since the chart starts for Newmont. It doesn't actually start in 1968, I don't think. The next one you can see is the GDX. That's an exchange-traded fund which holds all the largest gold mining stocks. So it is the average of them all. And although that particular line starts in 2006, since 2006, it's only up about 40 or 50%. But let's look at the chart since the global financial crisis. 2008 was the global financial crisis starting, and this chart goes from 2006 onwards. Here you can see that gold has also outperformed almost all the gold miners. The one exception is Wheaton Precious Metals, which has massively outperformed gold, but it's up 1,000% compared with gold's 450%. But all the other gold miners, including the GDX, the ETF, have put on a pretty mundane performance of between 0 and 300%. So gold miners have been lagging over the long run the gold price. People haven't believed that the rise in gold will be reflected in rising share prices or rising earnings of the gold mining companies. But we're going to look at a much closer picture. This is for the current year, 2025, from the 1st of January. Again, the gold price is the green shaded area at the bottom with a white line on the top. And the other 5 lines are the 5 gold mining stocks, all of which this year in 2025 have been outperforming the gold price. Now, this is why I think that some money has started to flow into the gold mining stocks out of probably the technology sector. So those people who are in the know are now starting to buy the gold mining stocks, which are massively undervalued, and they're starting to put money in, and this is just the beginning. Wait till the public at large wakes up and starts to do the same thing, which will probably be 2 or 3 years from now. So this tells me that a little bit of the smart money is starting to shift away from the overpriced technology sectors to the heavily undervalued gold mining sector. Now remember, the gold mining sector is tiny. It's even a tiny fraction of the size of a big company like Microsoft. So a little tiny trickle of money out of the technology sector or the AI sector into gold miners would make a huge difference to the gold mining stocks. It would push them a lot higher. Now, just to take a quick pause, you may have seen that below this video I have an affiliate link. The link will take you to a free booklet called The Investor Guide from Gold Bullion Partners in the UK. And the booklet tells you everything you need to know if you're considering investing in gold or silver. In fact, you might like pages 16 and 17, which discuss the UK's growing debt mountain. Now let's just move on and talk about my favourite 10 gold stocks. These are 10 out of 210 gold stocks that I have picked because I think they are likely to do extremely well. And later on I'll talk about 2 of them, which I think will be the best of the bunch, outperforming everything else. So now I'll go through these stocks one by one. First of all, Newmont Corporation, one of the largest gold mining stocks in America. Newmont has a market capitalization of about $75 billion US dollars. The next company I'd like to look at briefly, very briefly, all of these, is Harmony Gold. Harmony is a South African company and its mines are in South Africa. It has a market cap of 171 billion South African rands. The next company is a Canadian company called Torex, T-O-R-E-X, Gold Resources, already on a very low price earnings ratio of 8.5 times, forecast to go down to 7.6 times next year by the analysts, and those analysts' forecasts are probably quite somewhat out of date. Next company is a company called Equinox Gold. Next company to look at is Centerra Gold, again very briefly. Price earnings ratio last year 7.68, dividend yield of 2.85%. It's a Canada-based company, and it's got gold and copper mines in North America, Turkey, and some other countries. Next company is Perseus Mining Limited. That's a South African, no, it's not a South African company, it's a Australian company. The next company is B2 Gold. That's B2 Gold, all in one word. Letter B, number 2, G-O-L-D, all in one word. B2 Gold Corp. This is a Canadian company. Price earnings ratio is 8.34 times, going down to 5 times next year. Next company, and it's not a total play on the stock market, on the gold mining market, because it's also got silver and platinum and palladium and some other white metals. This company is called Sibanye Stillwater. I may have pronounced Sibanye wrong, but it's S-I-B-A-N-Y-E, Stillwater, S-T-I-L-L-W-A-T-E-R. So Sibanye Stillwater is a South African company which you can buy on the South African Johannesburg Stock Exchange. I think they also have ADRs trading in New York. So next we're going to go on to my 2 favorite gold mining stocks. And these are stocks which I think could go up a lot faster and further than the others. I don't want to tell you that they're 10 baggers or 20 baggers or something silly like that. If you want those sort of stocks which go to 20 times your money, Well, they could do that, but I think you're probably going to get in some of the juniors where they haven't found the gold yet, and after you buy it, they do find the gold. That's very speculative, not my cup of tea. But before I talk about that, I would just like to draw everybody's attention who's in the UK that you can now hold gold in a self-invested pension plan. And if you click on my affiliate link below from Gold Bullion Partners in the UK, it'll take you to an investment guide, and all the details of buying gold inside a SIPP, self-invested pension plan, are on page 15. When you get that document, put my name, Clive Thompson, in the Where Did You Hear About Us box. Now we move to two of my favourite gold mining companies. The first one is called Ramelius Resources. So first thing to say about Ramelius Resources is that it's an Australian company which is mining its gold inside Australia. That means that the political risk is very low, unlike many gold mining companies where the gold they're mining is in less politically stable places like African countries or some of the minor Asian countries like Indonesia. So Ramelius Resources mines in Australia, got a market cap of 5.3 billion Australian dollars. That's not bad. It qualifies not as a small company but a medium-sized company. Price earnings ratio in 2025 is 7.48 times, paying a dividend yield of 3.34 this year. According to my calculations, that price earnings ratio is going to come down substantially next year and the year after with the extra gold they're going to mine. And one of the features about this company is that they have bought another company called Spartan Resources, which has added huge reserves to Ramelius's resources. They say that the purchase could lift their production by 500,000 ounces a year by 2030. What else do I like? Their production cost is very low. Ramelius have a very strong cash position, despite the fact they bought this company, Spartan Resources. So they don't need to borrow money. They can fund their mining activities from their existing cash balance. No need for debt. I estimate the 2026 price earnings ratio will drop to about 5.67 times compared with the 7.48 times that you always see for 2025 estimated. And I think the yield will rise to 2.75% based on today's share price. Now, to arrive at those figures, I did a lot of maths, and I also, for parts of it, used artificial intelligence to help speed up the process. So the maths might be wrong, but I believe in enough to have bought the shares myself. The second company I really like, also in Australia, is called Westgold Resources. The symbol is WGX, Westgold Resources, WGX. Their production is set to rise by 60% in 2026. That's 60% more ounces next year than last year. Again, they're a strong company with very large margins, so the profitability on the gold is high. They have not been hedging their gold, unlike some gold mining companies, which slows down the growth of their profits. They're just relying on the raw gold price. And they expect, or I know I expect, based on my mathematics here, that the price earnings ratio will be 5.6 times next year. I see the analysts are calculating 5.7 times, so I'm pretty close to what the analysts calculate. The estimated yield going forwards, I think, will be 1.78%. Now, I'll also talk a little bit about the gold mining ETFs. There's two main ones which I look at. One is called GDX, that's the symbol, Golf David X-ray, GDX, Golf David X-ray, and the one's called GDXJ, Golf David X-ray Juliet, the J standing for Juliet. So these are the Van Eck gold mining ETFs. The first one, the GDX, is an index of all the large gold mining companies globally, not just the USA. And the second one is the smaller companies, the GDXJ, or what they call the juniors, J for juniors. These ETFs have performed well so far in 2025 for the first time ever in decades. They're probably beating the stock market itself, the rest of the stock market. So what we're seeing is sector rotation into gold mining stocks. Because the gold mining stocks are still extremely cheap, I think there's a long way to go. So this is basically my view. Not investment advice, do your own research. If you like this video, click the share button, please subscribe, and please give me a thumbs up and make a comment. I'll be happy to answer the comments if I see any. So thanks very much, everybody. Wishing you a lovely day and weekend.